Hello and welcome to the March 2019 quarterly update for the Diversified Income Portfolio. I'm Evan Lucas, our Chief Market Strategist and also Portfolio Manager. Very impressive quarterly return for what is actually quite a defensive portfolio, one that we very much weight towards defensive assets. It added 5.43% after fees in the last quarter, and that is quite a good comeback considering that Q4 was quite weak. We also saw something that we don't normally see in overall markets, which is where we saw equities and also bond markets appreciating quite neatly in that quarter. Probably need to drill into a few reasons for it. There is clearly three things at play that are going on globally that very much positively impacted this market and positively impacted the portfolio. One is the fact that macro conditions, particularly around the US Federal Reserve, are moving in a way that they could actually see more accommodation over the year. The US-China trade relation issue is starting to abate, and also we saw a very big movement towards risk-off trading as global growth is questioned, and that's why this portfolio really did do quite well from both sides. Growth clearly drove it, and that's even despite the fact that growth only makes up 36% of this portfolio, particularly property and infrastructure. And I want to highlight that quite heavily, is that it is clearly attracting bond yield. And the reason for it, they are proxy sort of preventing plays. And with that in mind, the fact that they're offering around about 5.7% as a group, which is accreting around about just under 0.5% of this portfolio, is quite impressive. And if we do see a change of government at the upcoming federal election, we expect that to actually add to this portfolio. Growth was also very much positive on equities, and both the IAA and also what happened in VGS was very positive as well. We know the Australian and also the international portfolio did well off the back of that appreciation, but it was around the bond market for this product. And again, we saw particularly Australian bonds having a very strong quarter. The Australian 10-year actually hit a yield it hasn't ever seen of 1.73%, and that clearly shows you that people are buying risk off. So very much the defensive. We continue to expect it to be that way, but the fact that it is diversified to have growth in there does allow you to have some capital gain, but overall very well performed.